I think overall where Bitcoin is in the cryptocurrency space in general right now has faced a ton of headwinds, throughout this year, right? Mostly because of the bigger macro factors playing with interest rates and overall investor sentiment. It's really negative throughout this entire year, not just in cryptocurrencies, but also traditional asset classes. The AAII investor sentiment study came out, and really, this is the most pessimistic that they've had since 1987 for their overall, consumer and investor sentiment for this year. So it'll be very interesting to see, and a lot of that has to do with rising interest rates, making less risky assets more attractive than something like cryptocurrencies or a lot of the growth name tech stocks.
So what's the long-term view versus the short-term view?
I think the long-term view is very bullish in terms of, over the next 5, 10, 15, 20 years for cryptocurrency. And I think this is a wonderful opportunity for younger investors, especially looking to get into the space that have that longer-term price, time window and overall horizon for cryptocurrencies in general. I think the short term, it's going to be facing a lot of volatility, just given the fact that the Fed is expecting to raise interest rates more in the beginning of the first quarter of next year. And obviously with all the news headlines coming out about cryptocurrency exchanges, including FTX and Sam Bankman-Fried, it creates a lot of challenges. So until those interest rates are paused by the Fed and a lot of those news articles become better, I think that more importantly, we could see some upward momentum heading into the end of next year.
Have we seen a bottom in Bitcoin, or is there still contagion left to be shaken out?
I think that's the big question, right? It really comes down to the Federal Reserve and how soon are they going to pause or even start cutting rates. That's going to be the real indication of where crypto, specifically Bitcoin, moves kind of in the shorter term. What we've been hearing from Jerome Powell is that if sometime in the first quarter, they may look to be pausing rates after we reach another 50 basis points. But overall, it really kind of comes down to the Fed and what their plan is with the interest rate cycle.
What do you think about CoinDesk indices finding that per unit of risk, it seems that Bitcoin is similarly in line with equities, even outperforming bonds? Is that something you would advise your clients?
Yeah, it's been a challenging year for crypto in general. I think with rising interest rates right now for investors, the risk versus reward ratio is just really not in favor for Bitcoin, because investors can go out and buy US treasuries where, you can earn 4%, really in the short term, no risk. And that really is in alignment with where interest rates are at. And until we see kind of that interest rate pausing, that's when I think investors will start realizing and focusing, hey, now is kind of the growth period. We're looking at the next business cycle once monetary policy is no longer tightening into this next cycle. And I think that's where the opportunity lies during these lower prices is getting in while, we've seen this correction all throughout this year and consistently dollar cost averaging given the volatility going on. But I think overall, this is the time period where investors can add a little bit, but is this the bottom? That's going to be in the hands of the Federal Reserve at this point.
What's your price target for Bitcoin in the coming months?
That's a great question. We don't really give price targets of where expectations would be. We thought that as an entire industry as a whole, Bitcoin would be at 100,000 by this point this year, right? And a lot of those price targets and analysis haven't come to fruition. So I think, in the short term, it's hard to tell. I think right now we're kind of consolidating at the 16,000 level. And again, what's going to be the upward or downward kind of direction is going to lie with the Fed. Maybe we kind of retest the early 20,000s by sometime next year, but that's really going to be the question, is where interest rates are going to be at for next year, looking forward to 2023.
So when you're considering your own clients and their risk reward profiles differing among different ages, what kind of portfolio allocation would you be recommending for them in terms of accumulating Bitcoin?
Yeah, so in terms of accumulation, this is a great opportunity to dollar cost average. Now is not the environment where you want to be putting everything all into one asset at one specific time, specifically with crypto. Just because there could be some more downward momentum that we see if interest rates continue to increase further than what a lot of investors are expecting. So these are the times, especially for younger investors, to dollar cost average, add on a systematic monthly, quarterly basis, annual basis, to start adding a position slowly. And that way, you know, as thinking out 20 years from now, this is going to be a great buying opportunity, you know, just like we saw in previous corrections within cryptocurrencies as an entire industry.
All right, Kyle, we'll wrap it there. Thanks so much. That was Gerber Kawasaki investment advisor, Kyle Clark.